budget edition of the Moneycontrol Show. I am Sakshi Batra. Well, the first budget of Modi 2.0 government has been presented by Finance Minister Nirmala Sitharaman, and this is where we will grapple with the budget fine print to really understand what it means for you, for the Indian economy, and for Indian markets. But first up, let's start by looking at the big highlights from Finance Minister's speech.
I rise to present the budget for the year 2019-20. It is well within our capacity to reach the $5 trillion in the next few years. Local sourcing norms will be eased for the FDI in single brand retail sector. Pradhan Mantri Shram Yogi Man Dhan was launched on 5th March 2019 by the Honorable Prime Minister in Ahmedabad. The scheme aims at providing 3,000 rupees per month as pension on attaining the age of 60 to crores of workers in unorganized and informal sectors. I propose to consider issuing Aadhaar card for non-resident Indians with Indian passports after their arrival in India without waiting for 180 days. Public sector banks are now proposed to be further provided 70,000 crores of rupees capital to boost credit for a strong impetus to the economy. Reserve Bank of India is the regulator of the NBFCs. However, RBI has limited regulatory authority over NBFCs. Appropriate proposals for strengthening the regulatory authority of RBI over NBFCs are being placed in the finance bill. Government is setting an enhanced target of rupees 1,05,000 crore of disinvestment receipts for the financial year 2019-20. I propose to make PAN and Aadhaar interchangeable and allow those who do not have PAN card to file income tax returns by simply quoting their Aadhaar number. In view of the rising income levels, those in the highest income brackets need to contribute more to the nation's development. To enhance the surcharge on individuals having taxable income from 2 crore to 5 crores and 5 crores and above, so that effective tax rates for these two categories will increase by around 3% and 7% respectively. I propose to increase special additional excise duty and road and infrastructure cess, each one by 1 rupee a litre on petrol and diesel.
Well, a 2-hour, 9-minute speech by Finance Minister Nirmala Sitharaman was loaded with quotes from literature and thought leaders. It had many announcements for various sectors of the Indian economy. And to understand really what it means for your business and for your investments, I have with me two very special guests on this show. I have with me Gaurav Choudhury, is the Deputy Executive Editor of Moneycontrol. And I also have with me Poorva Prakash, he is the Senior Director of Deloitte India. Thank you very much, both of you, for joining me in this very special edition of Budget. It's the Budget Day, and we've seen that delivery, the maiden budget speech happen of Nirmala Sitharaman as well. Your first reaction, starting with you, Gaurav, first, on the budget. How would you describe this budget in one word, and on a scale of 1 to 10, how would you rate it, 10 being the highest?
Yeah, so I'll come to the scale a little later. But first, I mean, this seems to be a decisive policy shift. For the first time, I see the budget being very, very strongly focused. In fact, if I were to say disproportionately focused more on investment than on the vast consuming class of India. For long, the Indian budget has focused more on the consuming class, which has been the case because the India growth story, unlike China, has been a consumption-driven growth story. So the edifice of the India growth story is primarily driven on consumption spending, but this budget tries to shift the tilt very heavily towards investment, and that is why we see more talk about investment, more talk about FDI, and more talk about small and medium enterprises, which is essentially the lifeblood of the Indian manufacturing industry. Nirmala Sitharaman has also tried to actually marry big data with some very focused policy mediation to raise farm income, and also on the farm sector, which has been dogged by very persistent agrarian distress for a very long time now, and we have been seeing protests by farmers all across the country demanding debt write-offs, as well as various other policy interventions by the government. Even in this budget, there is also a very subtle shift from a mindset of deficit. We are moving towards a policy attitude of surplus to deal with agriculture, which is a very, very welcome move, because for long we have been too focused on trying to focus on the supply side of agriculture, and that comes from that there is a history to it, and it's quite understandable, because for many decades we were hit by famines and droughts, and we were a net importer of food. But we are no longer a net importer of food. We produce abundant supply of food, cereals, and vegetables and fruits, and we export. So it's now about time to ensure that the farmers get the right price for the abundant supply that they produce. And that is why this shift more towards investment in farming, rather than trying to ensure that supplies go up. So I think that's a good thing. But the middle class will be the salaried will be a bit disappointed, because they were expecting something, especially on the exemption levels, which has remained stuck at 2.5 lakh since 2014, 5 years. Although the finance minister has pointed out that last time the slab was changed was in February, when the interim budget was changed, but that was only for those who earn 5 lakh rupees. Anybody who earns more than 5 lakh rupees, the old rules continue to apply. So on a scale, I think it's very middling. Around 7.5 upon 10.
Around 7.5. So Poorva, I'll come to you. Gaurav has emphasized on more investments is where the budget is really focused on. One word, how you will describe this budget, and on a scale of 1 to 10, how do you rate it?
I would say it's a good budget, and I would say probably I could take it up to 8, in terms of the scale, because they've tried to focus on some of their objective areas, and that's how they've tried to bring in the fiscal benefits, etc.
All right, so a good budget is what Poorva really says. But Gaurav, I have to ask you, does this budget really have in it to push the economy to a $5 trillion economy, which is the government's target by 2024?
It does, and I think what the finance minister has also done here is to ensure that reforms or policy making should not be held captive by a fiscal calendar. So budget is just one event in a fiscal calendar, and any medium-term plan should not be held captive to what's announced in the budget or what is not announced in the budget. Say, for instance, when we're talking about infrastructure, when we're building roads, why should be limited to just a one-year plan? And in this budget, it's just a 7-month plan, because the next budget is actually coming. It's just 7 months away on 1st of February. But be that as it may, for corporates, the finance minister has clearly signaled the government's intent that the headline tax rate is coming down rapidly to 25%. In fact, it has come down to 25% for those whose turnover is 400 crore or less, which according to the minister is about 99.3% of India's corporates.
So are you happy with that, or do you expect that did you expect it should have been extended to everybody?
No, it may, the fine print is that the effective tax rate remains more or less the same. And regardless of the fact where the headline rate is placed, in the effective tax rates according to Indian corporates is far higher than their peers in Southeast Asia and also China. So if Indian manufacturing has to compete globally, the effective rate has to come down. And that is where probably they are awaiting the report of the Direct Tax Reforms Committee when exemptions will be weeded out and more efficiencies will set in.
Right. Now, Poorva, I'll come to you on the same topic of taxation. There were huge expectations on the tax front from the middle class as well. There is disappointment on that front. We haven't got any extension of the exemptions or even under ATC as well. Corporate tax, I'm sure some of the corporates will be happy whose turnover is under 400 crores. What would you say to that?
So see, the government's focus this time seems to be, towards the high income taxpayers.
Yes.
So that's why they have increased the additional surcharge. And of course, it means a big burden to them because currently the rate is 15%. So it essentially goes up to say 27%, and it goes up to say 35% of the surcharge on an income category ranging from 2.5 to 5 CR and above 5 CR.
Yeah.
So effectively, the tax rate currently was 35.88%, which goes up to say 37% and say 43%, which means pretty high.
Yeah.
But yes, to some extent, yes, middle class is of course kind of disappointed because they were expecting, that there's going to be some increase in the exemption limits, or there'll be to give a boost to the saving sector. There'll be higher deductions available under ATC, but that has not happened. But I think the intent, what the FM has expressed, is that in the interim budget, they had already given a rebate to income category up to 5 lakhs. So perhaps she didn't want to concentrate there, and she wanted to focus on the higher taxpayers.
Absolutely. So higher taxpayers is the pain point, and which is why we also saw the markets really slide right after that announcement as well. So the wealthy have been taxed as opposite to what we have been discussing in our pre-budget discussions, or probably an inheritance tax or a wealth tax to come. That hasn't happened, but the wealthy have been definitely taxed. Do you think from a market's point of view, this is going to be really hard blow for the markets to deal with in the coming few days?
At least if you go by the initial reactions of the market, yes, they haven't liked it, and this is something that they think could have been best avoided.
Yeah.
But the intent of the government is very clear here. The government wants, if you look at the banking cash transaction tax that has been brought back. In fact, BCTT was an old idea, which was first introduced in 2005, and then rolled back in 2009. Now it has been brought back again, and this is based on data that the government would have mined from demonetization and subsequently. And it is also based on the Tax Administrative Reforms Commission head by Parthasarathi Shom, who had recommended that the BCT type of a levy should be brought back because it helps the government trail tax dodgers and who like to hoard money in cash. And and this time the threshold limit has been set very high at 1 crore rupees. So if anybody who's withdrawing more than 1 crore rupees a year from a single bank account will be liable to pay a tax of 2%. On that amount, on the amount withdrawn, and merchants have also been incentivized so that they pay less fees and charge for accepting digital payments and also installing infrastructure. So the government's focus on taxing the rich, and this is the tax on the super rich has been something that was first introduced in 2013 by Chidambaram, and then this government has actually consolidated that view, and the Narendra Modi government has been very clear about it, that those who are wealthy will have to bear the burden of the welfareist policies. And clearly the signal and the message from the government is very clear. Anybody who's trying to tax the dodgeman, who's trying to dodge the taxman, is not going to have it easy. BCTT is something that the banking cash tax is something that the government is going to take it very, very seriously.
Right. And now, Poorva, middle class is certainly not happy because there is no exemption limit or the increase in investment limit under the ATC. But there's something which is for them, and that is the NPS. So could you expound more upon that?
Yeah, sure. So for middle class, besides NPS, there are other areas. But yes, NPS was again an expectation, because currently what happens is under NPS, when they subscribe to that scheme, so at the time of withdrawal, 40% goes to the annuity and 60% can be withdrawn as lump sum. Out of that 60%, 40% was taxable. So now the entire 60% is exempt. So this would give a boost to NPS, and people can definitely invest in NPS, and it's also a good return, trend that we're seeing. So that's a good one. And besides that, the middle class have, just to kind of boost the government's policy on affordable housing. So to that extent, people living in say tier 2 cities, etc., they were, or small taxpayers who want to purchase house up to 45 lakhs. So there they will get a deduction when they take a loan for purchasing that house property, and that deduction is available up to 1.5 lakhs. So this will be deducted from their gross total income. And of course, there are a couple of conditions around that, so they can, there's a sunset clause. So they can purchase it within this year, say by 31st March 2020.
Right.
And they should not be owning any house property. But yes, it encourages
And there
people.
is some interest, rebate also for those people who want to buy electric vehicles as well.
Yeah, absolutely. So that's another area, but that's again to boost their EV policy.
Right.
But yes, it does give incentive, to the taxpayers. So when they take a loan to purchase EV vehicles, they again get a deduction of 1.5 lakhs on that interest payments, So that'll be available up to 5 years. So that's a good, these are the good areas, that they can actually divert their expenditure in a fruitful investments.
Gaurav, I'll come to you. The one figure that all of us, at least on Money Control, were watching out for, the fiscal deficit number. The markets were also bracing up for a probable breach on the upside. But this is a surprise. It has been, lowered down to 3.3%. But there is no indication, no roadmap or timeline by when it can be met. Is it really achievable?
If you go by the fiscal maths that the government has put out,
Yeah.
At least the government thinks it is achievable. And a large part of that is, a significant part of that is going to be funded also by disinvestment revenues. So the disinvestment revenues that the government had expected at the time of presentation of the interim budget has been, they've set a higher target this time, and that's quite ambitious, I would say, because from 90,000 crore that they had estimated in February, that has been set at 105,000 crores. So 105,000 crore is, it's a 15,000 crore higher target. And also the finance minister was very clear that strategic disinvestment will continue, and she specifically mentioned about Air India. And clearly, I think Air India's privatization is something that the government is very serious about, depending on what price it can get and what modalities it can follow. We may recall that Air India, this is going to be the second attempt at disinvesting Air India, privatizing Air India. The first attempt failed because bidders didn't show any interest. And there were other technicalities involved, and there were design flaws in the way the entire bidding process or the model at which it was attempted to be privatized. But this time, I think the government has some plans in mind. And also, if you juxtapose Air India's privatization plan with what the finance minister said about FDI in aviation, I think if FDI in aviation is eased and foreign airlines are allowed to invest in Indian airlines, Air India could be a prime target, as well as some of the private airlines. So some of these are, again, if you look at, say, for instance, income tax revenues or indirect tax revenues, the targets seem a little bit ambitious at this point in time. And also, given the fact that we're in the middle of a deceleration. So to a large extent, the government's ability to meet the fiscal deficit target, of which revenue is one part of the equation, if you're assuming that expenditure will remain constant and the government is not going to overshoot expenditure, then if revenues were to be met, then it's predicated upon an 11.5% nominal GDP growth. So the GDP will grow on a nominal basis, will have to grow at 11.5%, and given the current level of inflation, what the economic service said yesterday on Thursday, is that it has to grow at 7% on real basis. It may or may not turn out that way. If it turns out, these targets probably could be met. But if it doesn't, and if there are extra expenditures that come about during the course of the year which are unforeseen at this point in time, then it may be a tall ask.
Absolutely. Poorva, on the compliance point of view, there were some other announcements as well. If you could just expound upon that as well.
Yeah, sure. So one area which I would like to kind of highlight is that they have made it mandatory, where any taxpayer is entering into high value transactions, it's mandatory for them to file their returns of income, so they may not be filing because of some reason. But now if they enter into transactions, like if they've got a cash, if they're depositing money above 1 CR aggregate in any bank, etc. So they have to file mandatorily, they have to file their returns of income, or they're incurring foreign travel, either themselves or with any other person. Again, they have to file it, or for the electricity bill. And in fact, they're also saying that they will specify some more transactions on which, there's going to be a mandatory filing. So that's basically essentially kind of increasing the tax net and covering those type of, transactions into the compliance purview. But in terms of the ease of filing, yes, they have taken some good measures.
Steps,
Yeah, one is that they are saying that they're going to be, allowing a pre-filled tax return for a taxpayer, who has got a salary income or capital gains or dividend incomes, and the information will be directly populated from the source,
Yes.
So to that extent, it helps them, in terms of filing burden as well as the time in filing the return of income. So that's a good measure. Of course, they will have to reconcile it, with
Sure.
the actual, but yes, it's a good.
There'll be a
it's
pre-filled
good
form
share.
as well.
Yeah,
Now
it's
for
a
the
yeah.
simplification of this.
And another area is that they are making e-assessment processes.
Yes.
They don't want any interface. So essentially, how it would work is that they'll probably have some specified transactions, and through that, some automated notices will come, and a taxpayer has to kind of inform and get the assessment done. So that's, while it removes the interface with the department, but yes, a lot of transactions could get captured through government's data analytics.
Yes.
So that's one
Yes.
area. Another is that they have tried to ease for NRIs who are coming into India.
Yes.
So they have to now, on arrival, they can take the Aadhaar card instead of waiting up to 182 days. So essentially that 6 months period they needed Aadhaar or any registration, etc., can become easy for them.
Well, there have been many announcements that were, obviously going to push a lot of sectors like infrastructure, PSU banks, where recapitalization also has been announced. There were signals for the revival of the financial crunch that has been seen in the NBFC sector, which has been a cause of concern, and even the economic survey pointed out all of that. But apart from this as well, there have been some more disappointments as well. Thank you, Gaurav and Poorva, for sharing all your thoughts there on the budget. But definitely, we all know that budget is no magic wand. We will also have to wait and give time for all the reforms that the government has previously also announced in Modi 1.0 to figure out how the economy can really come back on the 8% growth path that all of us have been waiting for a long time now. Well, moving on, let's go across to Santosh Nair, editor of Moneycontrol, to understand really what the budget announcements mean for the stock markets. Thanks a lot, Santosh, for joining in. Well, the budget clearly stopped this Friday from becoming a Friday. What announcements in the budget really disappointed the street?
Well, thanks, Sakshi. Actually, market expectations from the budget were not all that high. But a couple of things in the budget did come as somewhat of a disappointment, most notably the surcharge on those earning an income of more than 2 crore annually, and there have been 2 slabs, one for those earning between 2 crore and 5 crore, and the second one for those earning above 5 crore. So that has come as a bit of a dampener for most of the high net worth individuals in the market, and probably you're seeing that reflecting in the share prices as well. The other thing which the market seems to be a little worried about is the proposal that minimum public shareholding in listed companies be raised to 35% from 25% currently. So this, while the government's intention is quite good in that it wants to increase public participation in the stock market, this could also lead to increased supply of paper in the market, and whether the market will be able to absorb this excess supply is what is slightly worrying the market. But at this stage, we still don't have the full details. But these 2 points are quickly some of the factors that seem to have disappointed the market a little bit.
Santosh, I also wanted to ask you about the fiscal deficit target that has been brought down to 3.3%. Was it a surprise in the first place? And do you think the government will be able to achieve that?
So, given that the economy is slowing, in fact, market would not have been all that disappointed probably if the government said that maybe it would go a little more aggressive on borrowing and wouldn't mind relaxing the fiscal deficit target. However, it has done that quite a few times in the past. So the flip side is that if you don't stick to your fiscal deficit targets, then you might not get much support from the RBI in terms of the monetary policy. So probably what the government is trying to tell the RBI is that, you know, we will stick to our roadmap on the fiscal deficit. So this probably in turn would encourage the RBI to reduce interest rates. So if you notice in the budget, there is no major fiscal stimulus other than in the form of the 70,000 crore package for PSU banks. So probably the government would be hoping that it could do something on the monetary front. So this is one way of conveying to the RBI that it's sticking to its roadmap.
Santosh, the markets were clearly not happy with the budget, and therefore we saw a sharp decline after the budget speech, and they also, closed with all the losses that we saw on benchmark indices, Sensex and the Nifty. So will the lackluster mood of markets continue for the rest of the week next as well? And what is next for markets really?
Well, the two major triggers for the market are now behind. One was the elections, and contrary to market fears that there could be hung parliament or the BJP would not get a clear majority like last time, you still saw the BJP returning to power with an even better majority. That's out of the way. That's been digested. Budget anyway, the expectations were not high. Now that too is out of the way. So once again, the concerns will again switch over to the earnings growth. The numbers there have not been very impressive for a few quarters now, and it doesn't look like things will change quickly. Even otherwise, you're just seeing a handful of stocks in the market that are doing well. The rest of the market continues to remain under pressure. So that mood, that's not going to change anytime soon. So we could continue to see a range-bound market for some more time to come.
Well, thank you, Santosh, for sharing with us all those insights. Well, the big budget has been delivered by Modi 2.0 government. It has failed to excite the markets, though, but we do hope that outside of the budget as well, the Modi government will continue to announce big bang reforms that can push the economy towards growth path. But for now, it's a wrap here on this budget special edition of the Money Control Show. But you can catch up on all the news and views around the budget on our digital platform, moneycontrol.com. Many thanks for watching.